The euro-US dollar has been selling off in recent weeks. Indeed, since last month, the dollar had already been strong, but now political risk in Italy is adding more selling pressure on the euro and is bringing euro-US dollar lower. So first, we'll start with the weekly graph of the euro-US dollar. As we could see, we are still theoretically in a bull, in a corrective bull trend. It started in late 2016 and made it up to the resistance of the top end of our corrective targets in the region of 125. Since then, a euro-US dollar has been correcting down quite rapidly. The risk index seems to be rolling over, but we cannot confirm that this is a long-term reversal yet because our envelopes are still heading up. But at least the reaction up since early 2016 seems to be over, and we are in a strong counter trend at the moment. Looking at the daily graph, the situation looks more dire. What we can see is that we are in a bear trend and that we have accelerated below our corrective targets, which were around the 118 mark. We could see that over the next few months, and we believe possibly towards mid-end summer, the euro could move down to 114 and possibly down back to 110. That said, we could expect some kind of a reaction over the next few weeks because the risk index now is very much oversold in the green area. Now what happened? Now first, the interest rate differential has widened quite substantially since September. The US is holding very much a tightening of its central bank policy. The Eurozone is trying to follow, but it's proving difficult, given that especially during the first quarter, the surprise index, the surprise economic European index started to deteriorate. We could see that the interest rate differential is rising quite rapidly. It may be coming towards an intermediate top here with our envelopes touching each other and our risk index in the green, but we believe that there's possibly another move during the summer higher into our impulsive 2 targets between 215 and possibly even up to 232. So that's the differential between swap rates in the US and in Europe. Now what happened? Well, we can see that the interest rates in the US made a new high recently and have since been retracing. We could see that they were overbought. We also believe here that they will attempt one last move up possibly during the summer. But what is more compelling is that we could see that in Europe, interest rates, and this is the 10-year German Bund yield, are rapidly retracing lower. And over the last few weeks with the Italian crisis, have lost almost 25 basis points. We could also see that the risk index seems to be rolling over and that it's not yet oversold. And that over the next few months, the potential for further downside is still there. Now what really happened is we can see here the spread between the Italian 10-year bonds and the German bonds, and this very, very rapid acceleration up since the political crisis started. It seems to have reached its potential to the upside for now, but bear in mind, this is only a daily graph, and so the weekly graph would have much more potential over the next few quarters. That said, the risk index has already climbed quite a bit, but there could still be another few weeks of pressure here until we reach the overbought zone. So the euro was in a correction up. That correction up seems to be over, and it is at least being retraced quite substantially. The daily is in free fall, but could be reaching an area where over the next few weeks it could see a rebound on an oversold condition here on the daily graph. And the hourly chart is slowly getting oversold. We are in impulsive 2 targets territory, so very extended targets, but it could still lead us perhaps one figure, even 1.5 figures lower over the next few weeks. Now looking at that in more detail, we can see, yeah, we're very much getting into oversold positions. Our envelopes are touching each other, but it could be another week or so, and negative surprises to the downside are still possible. Our view is that we would probably expect the slight rebounds we were seeing on the daily to materialize, but we would probably wait it out during this week to find a decent entry point. On the other hand, given the daily, and let's go back to the chart, well, over the next few months, there's still quite a bit of downside potential. So is it really worth playing the bounce? Probably not. Moving on, we could see that the euro is weak across the board. This is euro-yen. We could see that it's still hanging on to an uptrend on the weekly graph, but the daily chart has moved quite into a negative position. It still has some potential to the downside towards below 127 and possibly even towards 124, and it's not quite oversold yet on our risk index. That said, it could come in that position over the next few weeks because the hourly does seem quite stretched. We are in oversold territory with the risk index, our targets have been met, and our envelopes are touching each other. Similarly, on Euro-Swiss, we can see that we're still hanging on to an uptrend on the weekly. The daily has started to correct, but we still label it as an uptrend, although the top here seems to be quite nicely configured. And the hourly also here is slowly reaching its impulsive targets down between 116.70 and 115.65. And the risk index is slowly getting into oversold. So also here, although we do expect more downside, possibly towards the third quarter. At the moment, we may be getting toward the point where we're very much oversold and we can see a slight rebound on all the euro pairs. We'll also look at equity, and the Euro Stoxx 50 is still quite neutral here. It was hanging on to an uptrend. It seems to be reversing, but it's not a compelling downtrend yet. You see, we don't have any targets here, so we consider it a neutral situation. Following its very strong rally since a month and a half ago, we could see that it is still in an uptrend with quite a bit of potential. So we would still expect it to have one last attempt to the upside. And here, although there's still some potential down, quite compelling potential down, we can see that we are fairly oversold with the risk index getting into the green. So we would expect the Euro Stoxx to find support somewhere between 3,500 and 3,450 and attempt a last move up, possibly during the month of June. And in general, on equities, we're still constructive. If you look at the All Country World Index here, we can see that the weekly is still heading up. Although it is very much stretched, it could still extend one last time, and we expect it to gradually roll over during the summer, but we could still see one last rally. On the daily, it's working its way through a consolidation zone. The risk index seems to be repositioning to the upside, so it may justify this last attempt to the upside. And on the hourly position, we are correcting down. There's still a bit of risk here, possibly another 1% over the next week or so. So in general, the risk-off environment that we're currently seeing should probably extend during this week, but we would expect a position where we would be in a resume uptrend on most of these risk assets from the beginning of June. Now, just to conclude, we wanted to talk about some nice news. Our company and one of its products was nominated last Thursday as the winner of the Technical Analyst Awards in the Specialist Research category. And that product is the Capital Observer. It's an institutional newsletter. It's a monthly, and you can find more information on, all in one word, thecapitalobserver.com. Thank you very much, and we wish you a very good week.